These are my top 3 favorite trading strategies that I've backtested over and over, and every single month that I tested them, all 3 ended up being profitable in the long term. And by the end of this video, you too will know all the strategies and will be able to take calculated trades just like this one and make a ton of money. Oh, and by the way, I just found a strategy that performs extremely well, and I just posted it in my Telegram. This strategy absolutely prints. My Telegram is completely free to join, tons of value, and you can find some amazing strategies in there. I literally find profitable strategies for a living. If you want to join, I'll leave a link in the pinned comments. I'll see you in there.
My first boss in Pittsburgh in 1976 said, Stanley, the way you time the political cycle is you buy the market 2 years before the general election and then you sell it on the general election because they always rig things to be good in the election year.
That was Stanley Druckenmiller, one of the best performing traders to ever live. And he just gave us potentially one of the best strategies you could possibly hear. But I'm not gonna exactly take his word for it, so I'm gonna test it. Let's try. First, I'm gonna ask ChatGPT what the average returns are for each year of the presidential cycle. The statistics surprisingly backed up what Stanley was saying. Years 1 and 2 of the president being elected generally had lower returns, while the end of the term generally had higher returns. Then I went to the chart, and this is where things started to become very eye-opening. I marked every single year from 1980 till now, and marked 2 years before the president actually got elected. Then I marked every single year the president actually got elected. If you simply followed the strategy of investing 2 years before the president got elected, then selling when the president actually got elected, you would have made positive returns every single time. Let me repeat that, positive returns every single time. Out of the 40 years, the only time we had negative returns was the presidential election of 2004, where you basically broke even. That's insane. What's even crazier is if you decided to follow this advice, 2026 is the year you would be buying, and 2028 is the year you would sell. And if you haven't been living under a rock for the past 5 months, you could easily see that if you've been following this strategy for this presidential term, let's just say you'd be pretty well off. On to the next. To start us off with the second strategy, we're gonna explain one of my personal favorites, and it involves just one candle. And this candle can completely change your life. Let me explain. If you're overall bullish, you want to buy below the market open. If you're overall bearish, you want to sell above the market open. Let me show you. Go on TradingView. If you don't yet have it, I'll leave a link in my description. First, go to the daily time frame. In this example, we are overall bullish with this candle since it's green. Go to that candle, mark the open and the close of this candle. Next, go to a smaller time frame. For this example, we are using the 30-minute time frame. This green line marks the daily candles open that we marked before. This red line marks the daily candles close that we also marked before. Since the daily candle was green and overall bullish, we only want to enter if price goes beneath this green line. Now, you might be thinking, why would we buy if price is going down? The answer, liquidity. Liquidity is a pretty advanced topic, but to make it as simple as I possibly can without going too in depth, it's basically just a fake out where price breaks a low and immediately reverses afterwards, which, if this ever happens, it's an extremely bullish sign. So going back to our example, we want some type of sell side liquidity that goes slightly beneath the market open, does a fake, and starts heading in the opposite direction. Check. Next, we want price to show some sign of respect or bullish momentum by breaking the previous high, or in other words, a break of structure. To do this, just find the latest high, put a line here. Price must break this high before doing anything else. Check. Usually while doing this, price will create a fair value gap. A fair value gap is simply just when a chart moves up or down an insane amount, creating a huge gap. Price moved up so fast here that it didn't give sellers enough time to counteract the movement. Naturally, sellers will want to retest this zone again. A fair value gap will always be a 3-candle formation. You can mark a fair value gap by marking the first candle's top wick before the big move to the third candle's lower wick after the big move. This zone is the fair value gap itself. Congratulations, you now know what a fair value gap is. So going back to our example, usually when price breaks this previous high, while doing so, it'll leave behind a fair value gap. Check. Wait for price to retrace back to the fair value gap, enter here, set your take profit at the market close, and set your stop loss below this recent low. And just like that, we got a winning trade. And you now know a super profitable strategy. But there's a problem. Here we got a liquidity sweep, we got our break of structure, and we got a fair value gap. The perfect trade. You set your stop loss, you set your take profit, just like we did before, you enter the trade as static and are ready for an easy winning trade. But then this happens. So what happened? Why was this a losing trade? You see, this trader did have the right idea, but there's something very wrong with this trade. After this liquidity sweep, price does a break of structure, just like it should, but there's still something wrong. When doing this break, the candle doesn't close above the high. It just wicks above it and comes back down, which shows weakness. What we are looking for is something like this. When breaking this break of structure, price breaks through it strong. But the key thing we're looking for is the body of the candle closes above the break of structure like this. Now that we have a break of structure that not only broke, but broke strongly through it and closed above the break of structure, we can now enter at a fair value gap like normal, and now we have a winning trade. On to the next. This one tool can predict exactly where price is going to reverse, and it's pretty damn good at it. First, grab your Fibonacci tool, go to the settings, change the values to 0, 0.706, 0.618, 1, and 0.79. This will give you 3 main levels that will look like this. These levels are what's called the golden zone, or where price has the highest probability to reverse. But we're gonna add a little bit more to it to make our edge even greater. First, find an uptrend, mark from the low of the uptrend to the high of the uptrend. Once this is done, we now have our golden zone, where price is most likely to reverse. But we can make this trade even better. What I like to do is pair this with a fair value gap. So here we have a bullish fair value gap, but not only that, it's paired exactly within our golden zone. Wait for price to come to our golden zone, and within the fair value gap, enter here, set your take profits at the highs, set your stop loss below the golden zone. Boom, easy winning trade. But you also need to know what to do if the chart is going downward. This time price is going downwards, so we'll look for shorts. Mark from the high of the move to the low of the move. This will give us our golden zone. Ideally, we want to see a bearish fair value gap within our golden zone, which is exactly what we have here. Wait for price to come back up, enter into our golden zone, but not only that, enter into our bearish fair value gap. Enter a short trade, set your stop loss above the highs, set your take profit at the lows, and we got yet another winning trade. You can combine all 3 of these and make the ultimate strategy. What's even crazier is all this value looks like an absolute pebble compared to what I just shared in my Telegram. I share all of the highest performing strategies in there. Whenever I find one, I test it, and if it's profitable, I share it. It's completely free to join. If you want to check it out for yourself, the link is in the pinned comments. I'll see you in there. Thanks for watching, and I'll see you guys next time.